Hello and welcome to another episode of the Startup Operator Roundup. I'm Roshan Karyappa.
And I'm Gunjan Saha, and together we break down the biggest headlines from India's growing startup ecosystem. In this week's roundup, we'll be talking about Warren Buffett's exit from Paytm with a 40% loss.
Wow.
And then in Delhi, bike taxi drivers have written to the Lieutenant Governor saying that nearly 50,000 riders will be rendered jobless due to the new scheme that they'll be implementing. In the food delivery space, IPO bound Swiggy is trailing Zomato in key metrics, so we'll do a comparison of how they stand. And Phonepe has onboarded multiple well known gaming companies on its new Indus Appstore. And on the same lines in the gaming space, a group of ministers will be meeting on December 15th to discuss the regulations of online gaming. So, a lot of things to discuss in this week's roundup. But before we begin, if you are new to this podcast, we discuss regular updates from India's startup ecosystem, have conversation with founders, investors, and operators. So make sure you subscribe to our channel. And if you're a regular listener, then please consider liking this video. Let's get started. Well, Roshan, a lot of things happened last week, but I think the biggest news was, the demise of Charlie Munger.
Yeah.
He is a crucial player along with Warren Buffett, who made Berkshire Hathaway the company it is today. So his loss is a big blow to the business world.
Sure. Yeah, for sure. I mean, he is like a once in a generation sort of a phenomenon, right? Charlie was really wise, one of those people who had quotes and, sentences for Mungerisms for everything possible, right? I mean, he has this compilation, the Poor Charlie's Almanac, right, which is stock full of wisdom that you can apply in plenty of different situations. One thing I've realized as I've started investing in the markets and tried to understand a bit more about that is that a lot of your learnings in that endeavor translate to other spheres of life. Right, and Charlie was an extraordinary person, and he had really hard circumstances as well. He was divorced at 29, and this was 1953, so it wasn't like today where it's fairly common in the US at least, right? But he was divorced at 29. He lost his kid, 8-year-old kid, a year after that, right? And there are some really very memorable quotes and anecdotes of that time of him spending time with his son Teddy, right, while trying to earn back his fortune and so on. So imagine that, right? I mean, imagine you're divorced, you're broke, you've lost your son at 29 or 30, right, and then you rebuild everything back, and you become one of the best investors of the 20th century. And well, I mean, at 53, he lost eyesight. He lost vision in one of his eyes, due to a botched surgery. So talk about all of the difficulties that one man had to face, right? So fantastic person. He did, of course, not have the most optimistic frame for India, right? Because I think he was more of the Lee Kuan Yew sort of perspective that India is far too diverse, far too chaotic to be managed. In particular, he believed that we had taken all of the bad things from the Western culture, whether it is protesting or whether it is like an undue importance to rights and so on and so forth. It was he didn't believe in the India story, right? Hopefully, we will prove him wrong on that front. And knowing Charlie Munger, he would have frankly changed his mind given new data and evidence, right? So the world has lost a real one. I mean, not many people like this come across in life, right? So what you could do is perhaps read and reflect on some of his quotes and sayings, I would say.
Well, he had his book, right? And many people have been trying to copy his investing strategies and all, but no one could really succeed in it. So what do you think was special about him?
Well, in Charlie's own words, right? I mean, what he said was, I'm going to butcher the quote, but something to the effect of two things. One is that try to be a little more intelligent than the average for a long time, right? And you're going to have spectacular results, right? That's just the principle of compounding. And second is that he often said that Warren and him did a lot of great things by simply not being stupid, right? Instead of being really brilliant or
Hmm.
really fantastically genius about something, right? And that's the way to go with a lot of things, right? I mean, you avoid all of the really terrible, stupid things, and you're going to find your way to the promised land. So yeah, I mean, that is what stood out. And think about the longevity aspect as well, right? I mean, he's 99. He died at 99. Warren Buffett is perhaps 94, 95ish. They've been at it for about 6 decades, right? 6 decades. I mean, I wish that everyone is able to find something they love that they can do until they're about 95, 99. Yeah, it's pretty sad, but his wealth of wisdom will live on, I would
Yeah,
say.
for sure. Yeah.
Yeah.
Well, but talking about Berkshire Hathaway, Berkshire exited India by divesting its shares in Paytm. They sold the entire stake in the company for around $164.7 million and then incurred a loss of 40%. Paytm was one of those rare investments by Buffett in India. And at the time of investment, it was considered a strategic move by Paytm to diversify its shareholder base from China's Alibaba and get a market investor in the US. But lately, Paytm's business financials have been performing well. Their losses narrowed down to 292 crore rupees for the quarter that ended in September. Revenue grew by 32%, and it has been witnessing a steady growth in its product folio as well as its merchant base, right? And the stock as well. I mean, while they had a very bad opening,
Mm.
the stocks have given 92% returns in this just past 1 year. So, what do you think would be the reason for Berkshire Hathaway to divest?
Well, simple economics, right? I mean, he came in at the wrong time, basically. To use one of Charlie Munger's quote, he says it's better to buy a great stock at a fair price than a fair stock at a great price. But you could argue and debate whether Paytm is a fair stock at a great price or a great stock at a fair price. I mean, I personally feel it was neither at the point of at the point of time that Buffett invested in, right? But hey, think about the story, right? Paytm is the granddaddy of fintech in India. They've been at it for 20 plus years. And the way they've kind of turned around their business over the last year and a half, since, getting absolutely clobbered in
Yeah.
the markets, shows that, you can expect great things from Paytm, right? And as you mentioned, they've recovered plenty from where they started, right? So, yeah, unfortunately, this is Buffett's second investment in India that's gone down the drain, right? I mean, he invested about $15 million way back when, I think maybe 20 years back, 25 years back, in one of these KPOs. I forget the name, right? And he had to square off that as
What's
well.
the key?
So it's not been good going for Buffett in India, right? I mean, but it only goes to show that even the most remarkable minds can get it wrong sometimes.
Yeah. Well, and India
Um,
is not an easy market as well.
Certainly, I mean, there's this saying about India, right? It disappoints both the optimists and the pessimists. So, I mean, but I do feel that given where we are right now, on solid economic ground, that the India story will only will only rise to greater heights.
Yeah.
I feel, right? So maybe Warren might come in maybe next year or the year after that with a boatload of investments here. Yeah.
Moving on, Delhi's bike taxi drivers have written to the Lieutenant Governor and the UP government, saying nearly 50,000 of them have been rendered jobless due to the approval of a scheme that mandates cab aggregators offering passenger services to switch to electric vehicles. Quoting the letter, they say, "We feel that the government should understand that if someone is riding a petrol motorcycle, how can they suddenly get an electric bike? Neither are the electric bike taxis available in the market, nor do we have the money to buy them." Now, on the top, this looks like a very fair argument to make, right? Because if there's a new policy being implemented by the government, the necessary provisions to implement that should be put into place.
Mhm.
But what do you think of this?
See, any transition is going to have costs and consequences, obviously, right? Um, on that note, I mentioned this on the last roundup as well, that there is a huge market for anyone who's going to convert some of these, IC engines and whatnot into electric right now,
Yeah.
whether it's cars or bikes or whatever. So the Delhi government had given permission that bike taxis can be allowed if if they're e-bikes, right?
Right.
Electric bikes. So yeah, I I suppose there is this whole situation in the Delhi governance structure where the chief minister can do one thing, the LG can do one thing, and it's a lot of hazy policy and political territory, right? And certainly I'm not educated enough to understand who's responsible for what, but this tussle keeps happening, and people do kind of exploit some of this ambivalence, I would say. But yeah, I hope they rule one way or another. From a Delhi perspective, given how the pollution levels are and so on, obviously the government has an incentive to reduce these conventional engine bikes, right, and promote green energy more. So that is perhaps their argument, right? There's going to be consequences. People will have to deal with them.
But so I traveled to Delhi recently and I was speaking to my family there. Um, yes, the government is being proactive in cutting down the pollution within the NCR region, but the pollution is not arising there, right? It's the
Of
whole
course.
rice cultivation in Haryana, Punjab.
Yeah.
The reason why the stubble burning happens is because they need to cut the rice crop towards the end of October and they have to prepare the field by early November
Yeah.
for the next crop, right? And the easiest way to do it is through burning the stubble. Until unless that changes, the odd even cars did not work out in Delhi. Now we are talking about allowing only e-bikes. I don't know. I mean, what delta effect it will have, but well, I don't think this is going to solve the problem as such.
So this is a wonderful teachable moment for Gunjan, right? Which is that the policy answers require political execution. Sometimes the answers are so common sense, but really getting them done is such an impossible task. I mean, I often have these friends who are dilettantes and part-time policy guys and whatnot, saying that they have all the solutions for all of the problems, right? But hey,
It's political.
implementing all of these in such a large complex system, is a whole other matter altogether. But yeah, but by the way, I mean, I quite like the whole Andrew Huberman style that we are championing on this podcast. It was quite a coincidence.
Soup.
It was a coincidence, but yeah, I mean, I quite like this. I mean, we should perhaps make this a regular. I don't know. What do you guys think?
But you do know we end up wearing the same shade at least 90% of the time, and it's not planned.
Gunjan keeps copying my style, man. I don't know, man.
We'll
It's
let
just,
people
what they
decide in
say,
the
classic.
comments who is copying who. All right, moving on. Let's talk about the food delivery business. Swiggy's financials were recently published, and while the business is improving, it is yet to match the metrics of Zomato. And when Swiggy will be going IPO, I think they will be benchmarked against Zomato. In the first 6 months of 2023, Swiggy's food delivery business grew 17%, achieving a GMV of $1.43 billion. Compared to Zomato, their gross order value was 16% higher at $1.66 billion in the same period. Now, Process, which is Swiggy's largest investor with a 32.7% stake, had investment of nearly $1 billion. But now the Dutch group is planned to decrease its stake in Swiggy before the company goes IPO. Zomato currently has a market cap of over $12.4 billion and its share price has doubled since January. In the private markets, Swiggy has notched a valuation of $10.7 billion. But since then, they have been marked down by mutual fund investors. So as the company is gearing up for IPO, which I think will be sometime in 2024, how do you think this space is going to play out?
I'm going to stick my neck out and say that, the IPO is not going to happen, likely won't happen for another couple of quarters at least. Right, because the markets are still, I mean, even, and I'm saying this, a week after the blockbuster Tata Tech IPO and, IREDA, all of them doing amazingly well. Even so, I think, it's there's still a long way to go for actually Swiggy to become, IPO ready in some sense, right? Because you look at what the public markets have done to some of these stocks in the US, for instance, right? You look at your Instacart, your DoorDash, and so on. Right? I mean, they're all trading at reasonable multiples, right? And you look at how Zomato's stock has been rationalized as well, right? I mean, so Swiggy is not going to command that kind of a premium in the market, right? Because the story has already been written, right? I mean, Zomato was the first of its kind, right? And yes, people will agree that this is a duopoly market. There will be two players, of course, and yes, they will also admit to the potential of food ordering in India, which is right now at 6-7%, whereas in more mature markets like China and the US, it's maybe like 30 or 40%. And there's a long way for us to grow, and so on and so forth. But the story has already been written about, right? And the story has played out in terms of how Zomato has done. So why would someone pay a premium for Swiggy at this point of time when they could invest in Zomato, right, at more reasonable multiples, and which has been in the markets for about a year and a half, couple of years now, or they could even invest in the Door Dashes or the Instacarts of the world. It'll be a very, very tough sell, in my opinion, right? So, yeah, I mean, Swiggy will have to work that much more harder, I suppose, to really sell that story. Definitely not impossible because, hey, crazy things have happened. But in my opinion, a little unlikely, I would say.
Okay, interesting. We'll need to see how this plays out because I've been seeing Zomato and they have really done a good job in kind of capturing the tier 2, tier 3 markets. I think that's where the main business will come from because in urban areas, I think there's smaller niche players who have come out. For example, you can get subscription lunch or deliver straight into yours, that which kind of defeats the purpose of a Zomato or a Swiggy. So I think the main business will be coming from tier 3 and tier 2 cities.
So it's not just expansion, right? They also have to increase that average order value. I think that is the key thing because when you focus on profitability, I mean, you have to be making more money on every transaction, which is what they're looking at, right? I mean, and you look at some of their value-added services right now, whether it is Dine Out and so on and so forth. The focus is that. The focus is how can we take that average order value from 400-ish to maybe 500, 600, or 700, right? And how can we increase that amount of money they make in each of these deliveries. So yeah.
Yeah. All right, let's talk about Phonepe, who had launched its app store called the Indus Appstore in September earlier this year. Last week, the company has onboarded the likes of Dream11, Nazara Technologies, A23, MPL, and others on its app publishing platform. Now, what's different in this app store is that these game developers will be charged zero commissions for in-app purchases, which is in stark contrast to that of the Google Play Store or the iOS App Store. These stores charge close to 15 to 30% in commission. What in this app store tries to achieve is to provide users with a more localized, more contextual, and personalized app discovery experience. The app store is available in 12 different languages apart from English, which really helps, like I said, the tier 2, tier 3 people to adopt, smartphones and not smartphones, yeah, but explore the apps that are available. So what do you think? We have had speakers, we have had guests on our podcast, who really did not have a great experience dealing
Yeah.
with the Google App Store.
Yeah.
And there has been talks.
Google Play Store, you mean?
Google Play Store. And, back in 2020, we should discuss that Paytm and the likes coming together, asking for a new marketplace for apps.
Yeah.
So now in this App Store is shaping up.
See, it's a fantastic idea, and I really hope to God they have the adoption that it requires. Because see, we've spoken about how this Google tax is like a hafta, basically, right? And think about any technology, right? Any concept in software, for instance, right? The longer it stays, right, the more easy it is to sort of commoditize it. You know what I mean? ERPs were a big thing in the 90s. Now, not so much. Right? Mobile apps were a big thing, 10, 15 years back. Now, not so much. So on and so forth. And I make the same case for, these marketplaces and stores and so on and so forth. Yes, 10, 15, 20 years back, you could argue that, someone has to take care of the security, someone has to take care of the infrastructure, someone has to take care of all the transactions and so on and so forth. So it's a really, really complex task. And trust me, it is still a complex challenge, right, to manage something like a Play Store or an App Store. But is it something that people cannot do? I'm not sure, right? I mean, we're living in times of AI and whatnot, right? um, at the heart of it, I think it's just a marketplace. Yes, there are security considerations, and yes, there are 100 different ways you have to align incentives to make sense, right, and prevent fraud and whatnot and data theft and all of those things, and those are not easy. But I'm sure that we've had more than enough precedence and time right now to figure what the right thing is to do, right? At least, I mean, it's worth attempting, at this point of time, because how long are you going to be like beholden to your Apple and Google ecosystems, right? So it's a noble effort, and I really do hope that you know we we have an alternate, right? Because think about Google's tax, for instance, right, or transaction fee, for instance. I mean, it's first of all they mandate that you can only use their
Payments. Yeah.
right, citing security or whatever it is, right? And then they're gonna basically, I mean, with that, that's basically a monopoly, right? So they're gonna charge you whatever transaction fee they can, right? We've spoken about how their redressal mechanisms are really, really terrible, right? I mean, you have to exchange emails with someone in like a European time zone for a couple of days for any resolution, right? And a lot of these companies, their apps have been like struck out like very arbitrarily, right? Whether it's Cuckoo FM, whether it is Avas, and it's nothing scandalous as well, right? I mean, I can understand if it's something like betting or some pornography or whatever, right? But these are like normal apps that you use on a daily basis. More or less, I mean, that whole um, transparency isn't there, right? In terms of ranking, algorithm, ads, monetization, etc., etc., etc. Right? I'm not saying that the Indus App Store will be that magical, that place where everything is all right. I'm certainly not saying that, but I'm sure that having an alternate will get Google and Apple also to try that much harder, right? So yeah, I mean, more power to them, and I hope that they get the adoption they deserve.
But one thing like over here that stands out for me is that this is beneficial for app developers for sure. But the fact that iOS App Store and Google Play Store is so ingrained in our day-to-day mobile experience, because every mobile today ships with either the App Store installed or the Play Store installed. How likely are people to change their behaviors of
It's a
downloading another app
humongous
store?
challenge. Obviously, it's a humongous challenge, right? But hey, I mean, it's not insurmountable. I mean, it's not something that is impossible to do. I mean, there's a good story to it, right? I mean, you talk about Atmanirbharta and so on, right? I mean, it should extend beyond, everything. It should extend from your device to your infrastructure to your app to all the layers involved, right? So yeah, I mean, it's not an impossible thing. So it's definitely worth attempting.
Yeah. Okay, now talking about gaming, a group of ministers on December 15th will be gathering for a meeting regarding the regulations of online gaming. This will be the first ever official meeting on this matter. One of the key issues to be addressed in the meeting will be effective tax policy for online gaming. Home Minister Amit Shah, Finance Minister Nirmala Sitharaman, Minister of State Electronics and IT Ashwini Vaishnav, and Media and Broadcasting Minister Anurag Thakur are all anticipated to be there at this event. Now, the recent increase in GST has severely affected the online gaming industry, and while the government calls it fair, many industry stakeholders have believed that the central government might have overdone it. Tech and gaming lawyer Jay Saita says, since gambling and betting, including online gaming, is a state subject, the rules could not have usurped the powers of state legislations.
Mm.
Now, we have been talking about the gaming laws in Karnataka, in Andhra Pradesh and stuff. So, how do you think this will play out when the central government is trying to take it in one way, whereas states want to take it in another way?
See, the central government is right in streamlining this, right? Because you can't have a situation where there are different laws for in Karnataka versus Tamil Nadu versus somewhere else for something like this, right?
Mhm.
Then people will just find ways to usurp that and make those laws redundant, right? Because here again we're talking about a digital realm, right? We're not talking about some gaming den or where people are throwing darts at a at the wall, right? I mean, it's not a physical space, right? So obviously, I mean, there has to be more cohesive policy, and it has to be at a central level. Now, what is a problem, right? So the first thing is whether this whole thing is a game of skill versus game
Game
of
of
chance,
chance.
right? And if it's a game of chance, I mean, obviously the government doesn't want to promote that, right? Given the very drastic consequences it can have, right? And the second thing is the government is right in thinking that, look, I mean, this is something that impacts the youth of the country, right? And about, according to some stats, the 45% of the users, gaming users, are women, apparently, right? So obviously the government has a special consideration in terms of, hey, how is this impacting, the youth, right? And you've seen what China has done, for instance, right? Where they've just struck down very, very, very heavily on these things. I'm not saying we go the China route and you know take a just club everything and like do a bull in a China shop kind of a situation. But I mean, there has to be some kind of a median point. At the very least, every sane person agrees that there has to be regulation. Now, what is absolutely not done is living in ambiguity, right? And the government has, basically has tried to show the finger to
Yeah.
the industry in different ways. Increasing the taxes and whatnot, making it super unviable. But then there is this retrospective taxes, which, I mean, if some of these companies even sell at their peak valuation right now, they
They won't
can't
recover.
recover that kind of cash, right? So there's a lot of ambiguity, and I really hope that the industry bodies and the government, that they're able to come together and solve this. The government had initiated like a self-regulatory body about a year back, right, where these folks can get certified themselves, right? But following that, I mean, again, there is not much that's happened. So yeah, I really hope that there's more commonsensical stuff that happens here, because it's a huge industry, right? I mean, it's around $10 billion, right? And you've let it flourish for 10 or 11 years, and then now you've struck down very heavily on this, right? So yeah, I think I really hope and pray that the entrepreneurs get a little more clarity. Yeah.
But who should be responsible for framing the laws? Should it be the state or the central government?
I think the center can define certain guardrails and so on, right? Um, Again, right? I'm not a very educated in terms of like how these federal laws work and so on and so forth, right? I mean, I do know that in certain cases the central government can usurp that. Like health is a state subject, for instance, right? But during COVID, we had a special situation where the center was administering a lot of these things. Um, uh, you know, so yeah, I mean, we'll have to figure, but at the very least, I mean, there has to be more clarity, what is allowed, what is not allowed. And the government shouldn't use the tax man to just like act as a headmaster and like align incentives very what do you say, simplistically, I would say.
Let's talk about the edtech space, and this time we'll stay clear of Byju's news. Upgrad in their FY23 report, they logged a revenue growth of 96%, where at the same time its losses grew by 76%. Now, these losses resulted primarily from non-cash expenses like goodwill write-down, depreciation, and stock option grants. The company did lower its spend, especially in advertising and marketing, by around 8%, but costs like employee benefits spiked by 79% to 707 crores. Now, Upgrad competes with the likes of Byju's, Great Learning, and SoftBank's Eruditus. Great Learning, which is a business unit acquired by Byju's, reported an income of 801 crores, which is up 34%, and a loss of just 8 crore rupees. So we're seeing, the situation Byju's is in.
Hmm.
The edtech sector, while it was a very booming sector during the COVID, it has definitely slowed down. But Ronnie Screwwala is a veteran entrepreneur, right? I mean, to say that he's smart is the least thing which I can say.
Yeah.
But they report almost doubled its revenue. So what do you think the edtech sector will shape up?
I think, I mean, here is me just, hazarding a guess, right? I think some of these costs have to do with the fact that they have to set up a lot more offline centers and whatnot. I mean, I could be totally wrong on this, but I mean, I'm just trying to guess here, right? Because a couple of things that people have realized, in the edtech sector post, 21, 22, is that your cost of acquisition on the digital side is just like ballooning like crazy, right? And the second thing is that people are going back to offline modes of education, right? I mean, people are going back, I mean, certainly back in schools and colleges, right? And the tuition centers are running full as well. So yeah, I mean, you need some sort of an offline approach as well. You can't be purely online, right? So I feel like a lot of these costs are probably going into that. right? Going into offline setup and whatnot. And the third thing, with employees back in the office right now, obviously they need to spend a lot more, right? Gone are the days when you can save on lights and water and coffee and electricity and whatnot, right? So I suppose that would show up on their balance sheet also. Not to the degree that they mentioned, but that is possibly the ESOP buybacks
Yeah.
and whatnot, right? I mean, which is good. I mean, which shows a greater confidence in the business from an entrepreneur's perspective, right? So yeah, uh, let's see how this kind of plays out. I do feel that edtech is the present and the future, right? I mean, only if you run it in a rational sense, right? And yeah, let's hope that these businesses have learned from the 21-22 experience and are wiser going forward.
We're also seeing acquisition in the edtech space. Last week, Allen Carrier Institute announced the acquisition of doubt-solving platform Doubtnut.
Mm.
Sources assert that it's a stress deal to the tune of $10 million, whereas the company had raised about $50 million in total funding.
Yeah.
Apart from that, we also had a couple more acquisitions. Venture debt firm Stride Ventures acquired Mo EVing. Cardeco's acquisition of majority stakes in Rev and plans to merge it with existing offering signals a strategic consolidation within the used car space as well.
Mm.
So I think you did speak about this, right? The whole automotive space will see consolidation. The whole edtech space will see consolidation.
Yeah, I mean, there's going to be a slump sale of sorts, right? And this is just the beginning, I would say, right? Now, Doubtnut, for instance, they raised 50 million. I think they were probably doing about 3 million or so in revenues, right? And they've been acquired for, 3 times that, or
Yeah.
about 10 million, right? So yeah, you're going to see plenty of this as well, right? Some of the larger existing conventional players acquiring these, newer businesses, right? Because obviously no one's got money to put in a growth round, at least when the business fundamentals are not clear yet. So yeah, you're going to see a bunch of these folks scoop the smaller businesses.
Yeah. Well, last week there were quite a few early stage rounds. Fi Commerce, which is a omni-channel payment solution provider, led the early stage funding round with a $10 million fundraise. D2C brand Innovist, fintech firm Grow XCD, and health tech company Zyla Health secured $7 million, $6 million, and $4 million respectively. E-Motorrad, which is an electric cycle manufacturing company, emerged as the sole growth stage startup, securing $20 million in Series B round, and that was led by Panthera Growth Ventures. Now, I think from towards the end of November, we did see an uptick in fundraisers, but I think there's also because we saw a lot of funds raise
Hmm.
capital and that money needs to be deployed somewhere. Moving on to the talk of the town section, there's a very interesting tweet by Radhika Gupta, who is the MD of Edelweiss Mutual Fund. She says that if you were to ask me the industry I'm excited about the most over the next decade, and we look across the economy, financial services would be in the top three without a doubt. And then she goes on to explain it. She says that the problem with traditional definition of fintech and the approach to fintech is that a lot of fintechs in India have built thinking users with no revenue model in sight. Cross sell is the big hope. Then financial services truly require a long term approach, and a lot of people seem to be in a hurry. Third, she says financial services cannot exist without respect for regulation. So she's still optimistic about the growth of fintech
Yeah.
in India. And since 2010, we have just seen this entire sector just blow up.
Right.
I mean, there was a saying, right? Every company now wants to be a fintech company.
Yeah. Yeah. No, Radhika is a very sane voice in the entire sector, right? I mean, I follow her on Twitter. I've had her on the podcast earlier as well. She's a fantastic person, and she's built a fantastic business at Edelweiss as well. She's spot on. I mean, if you look at the fintechs over the last like 10 years, I think most of the innovation has been on the sales and customer acquisition side of things. We made the point earlier as well, where a lot of these fintechs will act as the tip of the spear for some of these conventional banks and NBFCs and whatnot, right? Which is what they've been doing. Now, the point is that they need to move from sales innovation to product innovation, really, and solve the core problem there, right? And this will involve, working with the regulators, not thumbing their nose against that, and really thinking for Bharat, right? Thinking for India. So because if you look at the market, we're still so very underpenetrated, Things are improving drastically. I mean, if you look at equity, demat holders, for instance, I mean, that's grown like almost 5x, I would say, over the last 2-3 years. Right, and similarly with mutual funds, and similarly with your credit cards and buy now pay later, all of that stuff, right? But I really feel that there needs to be more product innovation, we need to look at more mature entrepreneurs coming into the ecosystem and solving this. And here again, I would also look at B2B plays, more so, because I think that is a little more interesting also. Right, because see, a lot of these banks, NBFCs are running on stack which is pretty dated, I would say, right? I mean, if there's some way to sort of transform their stack, for instance, as we do in Waymo, right? That was an easy plug, right? Where we're transforming the insurance and financial services stack, that could be interesting as well. So you're going to see a lot of those kind of businesses being built.
So these were the key highlights from the previous 7 days. Roshan, before we wrap this episode up, who are some of the guests you have lined up in the podcast?
Very excited for this conversation with Karthik, who's the CEO of Flexible. He's bootstrapped the company to about 3 million plus in revenues. Very active on Twitter as well. He talks about his journey and building in public, as they say, right? We had an amazing chat for about 90 minutes or so on how do you go from idea to product to company. We did a deep dive on those aspects, and really, I mean, if you are someone who is thinking of starting up, I think this is a fantastic episode for you to just listen to Karthik talk about very clinically what you should be doing first, second, and next, right? So great episode coming up. I hope you guys check this out.
Also, folks, thank you so much for the love you have been showing for the conversation Roshan had with Vimal, the co-founder of JustPay, and the entire Nammayatri story.
Yeah.
That was definitely interesting to listen to. And if you haven't already listened to the episode, go to your favorite podcast platform and do listen to it. So that's it for this week's roundup. We hope you've enjoyed the show, and thank you so much for staying with us right till the end. Again, if you're a new listener to this podcast, we talk to amazing founders, investors, and other people from the startup ecosystem, as well as the biggest developments within the community. If you're a regular listener, please consider liking this video and sharing with your friends. And do let us know in the comments how we are doing and what more you would like us to talk about. Until then, take care, and we'll be back again with more exciting updates next week.
See you guys. Take care.